Hi, thank you for watching us here at Tax Talk UK, where we talk about all things tax and other important aspects that you need to be aware of if you are running a small business or self-employed. So today we're going to look at paying tax on dividends if you're trading as a limited company. And before we talk about that, if I could ask you please to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this content should you need to, as well as being able to find a whole range of content and information on other important aspects of working for yourself. So thank you. On then to paying tax on dividends. So the specific question we're asked is what tax do I pay on my dividends, and how does this happen? So one thing that is important really to sort of start with is the fact that dividends are the distribution of the profit after the corporation tax of the limited company. So therefore it warrants mentioning that profit will have already been taxed at 19% corporation tax, certainly for the micro entities and the size of businesses that I'm talking to today. So you make your profit, which is obviously your income less your allowable expenditure for the company. That determines the profit of the company, and then that is taxed, and that is a liability of the limited company to pay the corporation tax. And then whatever is left is available to distribute to the shareholder, which is the person that owns. So you will remember from other information that we've talked about that for your limited company, you will have a director or directors who run the company, and they may be paid through the payroll, through the PAYE system, which that is an expense of the limited company. And then also the company has a shareholder or shareholders, and those are the people or person, if it's a sole shareholder, who is entitled to receive the profit after the tax. So therefore it's just important to mention that first, albeit the corporation tax is a liability of the company. So when you draw the money as a dividend, that money that you take from the company then becomes your personal income. So that must then be declared on your personal tax return, and you will the threshold or the exemption allowance, which is currently £2,000 a year, you won't pay any tax on that. And then above that, you will pay dividend tax at the appropriate rate. So pretty much the same as PAYE tax. You have a lower standard rate, and then if you're a high rate taxpayer, a higher rate. So it will be taxed according to your tax rate that's applicable when we consider the whole of your income. So as we always suggest, if this is something that you're finding hard to understand or are not confident with, then of course you should always engage the services of a professional in that field to be able to support you. And of course, if you are engaging the services as a professional, please do make sure that they are qualified and they hold indemnity insurance, and that they are qualified to advise you on the topic. So hopefully this helps you to understand how you are taxed on dividends that you take out of your limited company. And as I mentioned, this is with micro entities in mind, so we're talking about small companies. So I hope that that helps to give you an overview. And as I mentioned earlier, please do take a moment to subscribe to our YouTube channel. Thank you very much for watching. Goodbye.